this is why you need to learn how to pitch. So let's talk about, the whole, who does this apply to? Number one, if you are a small, medium enterprise, so if you're a small business owner, right? Let's just call that small business owner. If you haven't pitched already, then you need to learn how to pitch to a very sophisticated crowd, because this is no longer about pitching a small amount anymore. It should be like, when I'm going to train you guys to pitch, it has to be a minimum 10 million up. That's the only thing that actually makes sense in Monte Carlo, because anything too much, if it's lower, it tends not to be taken seriously, not to my crowd anyway. So yeah, excellent. So small business owner. If you guys are a small business owner and you're thinking, am I ready to, do I need capital? Maybe, maybe not. But one thing you will need to do is you need to learn how to grow your client base and pitch to your clients and build enough. This is going to help you for pitching to your clients. Okay, so that's one thing. Secondly, if you are a business owner, but business who wants to scale. So like if you want to get to 8, 9, 10 figures plus, right? Because that is possible. And it's only possible, in my eyes, after you've raised capital. So like if you're somebody who actually wants to become and build net worth, because net worth is built here. I have never seen a billionaire that hasn't raised capital. The Billionaire Project is about creating net worth. Okay, so we are all about, what some of you have already mentioned, M&A, or more so like raising capital and then actually exiting. It's not just an M&A, it's all about actual raising, and then we exit, whether it's a trade exit or whether it's a IPO, whether it's, one of those things. And I work with very many investment banks. Morgan Stanley is one of the most prominent ones who actually sponsor the Billionaire Project. My point is that people like Morgan Stanley appreciate the fact that I have such high caliber or high standards when it comes to what I deem a good pitch or a good investment for. As an investor, I know how I want to see my money protected, and I go through the due diligence like nobody's business. So this is what I want to really explain to you guys and show you that that's how you should be looking at deals. And when you're pitching, you better be ready. Like, this is embarrassing. I would never allow people to pitch the way I've seen pitches right now. So when I train people, I will make sure you will be the best there is. And it's almost going to be like, where's the money? Like, people will be rushing to give you money, right? So this is really important to me. Okay, so, and for you guys. So anyway, businesses, if you want to build net worth, we'll talk about this a bit more. But if you want to be a billionaire, or if you have any aims to be a multi-millionaire, yes, you can do that privately, but with public money, or not so much public, but investment from private equity, you definitely can get to 9, 10 figures plus. If you go public, you should definitely be billionaire level. It should always be a unicorn when you go public. I don't really like small IPOs. And that's the reason why Morgan Stanley is someone I'm very keen to work with, because if they underwrite any of the IPOs that we do, I'll tell you about projects that I'm doing later, then it would be much more interesting than just normal small, like 200 million market cap is too small. Right, who else is this important for? If you're an employee, like Shanice, I think you mentioned your work, right? If you're a corporate executive, you can have a lot of money in this life as well. You don't have to be someone who is a business owner. Learning to pitch as a corporate executive, you have to learn how to sell yourself. You could be doing a meeting in a boardroom, and if you don't make an impact, it will show. And, so people are getting promotions. How do they get promotions better than somebody else? Simple. They come across a certain way. They can close the person in front of them, and they can close, whether it's your boss, your senior, of any type. Learning how to close a deal and negotiate is incredibly important. So many of you in business will already know this, but in an employee mindset, they underestimate how much power they personally have. And I really love coaching corporate executives. So we have some individuals who work in public listed companies. They've been on a paycheck all their life. They got millions in the bank, and they come to me, they come to Monte Carlo because they want to learn how to now invest into something, or, some of them go from one PLC to another, and to negotiate that job salary, even that matters. It's all about how you pitch. So it can be done. It's very important to know that even at that level. And if you are just an investor, so if you don't want to pitch, but you want to invest, if you've got money and you want to learn how to invest in a deal, it is super important to understand how to analyze a deal, because again, we get lots of corporate executives. So I work with Credit Suisse, I've worked with Citibank, Barclays, Standard Chartered, gosh, I can't remember now who else, but those type of executive teams I've coached. They've paid me to coach their executives. I do one-to-ones with a lot of these high-level executives in banks, and they're really just normal people with a lot of money. You know, their paycheck is at least a 7-figure plus bonuses of another 7-figure. So it's a lot of money they have in the bank, but they have no entrepreneurial skills. They don't even know how to invest in like a pitch. You know, they're used to closing other deals. They get some level, but a lot of them want to, for example, set up their own fund. You know, so a lot of the typical scenario in a bank is that a high net worth or an executive, you know, they get to like 50 years old and they feel like their time is running out and they can't deal with the pressure. Even like at 40, a very enthusiastic banker will want to have set up their own fund by at least 45. That's usually the gist I get. And they want me to help them, one, capital raise, one, two, just think like an entrepreneur, because they've never done it in their life. They used to just rocking up to work and getting a paycheck, even though it's a big paycheck. They don't have any entrepreneurial spirit. So these are the kinds of individuals I really feel will benefit from learning how to pitch. So it could be just for building your better revenue by pitching to your clients. You don't have to pitch for capital. Here you are pitching for capital and you're building actual net worth. Like I will talk about the net worth in a minute. And then you could be an employee executive that just wants to get promoted faster, or you are an investor. You just need to learn how to look at your due diligence better and understand when a good pitch is a good pitch and when a bad pitch is terribly bad. That's really important to me. So when it comes to culture, there is a culture thing, right? So for example, you've got European, and I would say European is linked, is two ways, right? So when I work with international investors right now, we're international. Monaco is very international. I'm sure many of you have already been there and seen everybody from everywhere. We've got Americans, we've got Swiss, we've got French, well, not many French, but you've got loads of Italians, you've got loads of like North Scandinavian millionaires over there, and lots of money from all around the world. I don't know that many Australians, I'll be honest, there, but I don't know everyone, of course. But what I have noticed is when the culture matters, when you're pitching, the culture, if, for example, if what you've got to understand is the investor's culture, right? And what is Europe? When I say Europe, I would break it into Eastern Europe. Oops, can't spell. Let me start again. Eastern Europe. And then we've got Swiss culture, which is not part of Europe, as we know. But then we've got French, which is very different. And then we've got the rest. I think North, like Germany, the Scandinavian, they're very open-minded, really good. What do you think Eastern culture is like? So if you're pitching to, okay, no one's pitching to Russians right now, understandably, but there are a lot of Russians in you know, legal Russians in Monaco. So the ones who are left there, if you're speaking to Eastern, could be Latvian, Estonian. So the wealthiest people in Estonia and Latvia are people that I know, like the richest people in those countries are my personal friends, and they have been, actually they're based in Monaco and London. So they're, you know, but their culture, like if you're going to pitch them a deal, what do you need to think about? You know, so we have to, when you're pitching a deal, it's not just about how good, look at my pitch, it's amazing. It's actually reading the room. There's also, and then we've got other cultures. We've got Indian culture, because there's lots of billionaires from India that actually have Monaco residency. China, you've got Singapore, you know, like these. Monaco has really opened my eyes to knowing about international culture. Before, all I knew was London, like London and just British culture, right? Like we haven't even put UK in, but UK investors are, UK is actually good, I'll be honest. All right, let's just talk about these. Eastern European culture. They are very, very to the point. They are like, they will invest in things that literally have, you have to get really, they're very brash, right? So if you give them a deal that they don't like, they'll tell you straight away. So you've got to be, you've got to be ready for some rejection. Okay, so Eastern European will be the first ones to tell you that your deal is shit. Okay, so that's really important to know. Swiss culture, but they will invest. They've got lots of money. So Swiss culture is very, Swiss and French different, okay? A lot of people think that Swiss and the French are the same. I'll be honest, the young age groups come into here. If you're pitching to a Swiss generation under the age of 50, you're already winning because they are very much more forward thinking than anything 50 plus. If you're pitching to a Swiss culture investor or Swiss based investor who's over 50, could be a family office or whatever, then they're very conservative. They fall into the French category. French is extremely conservative, really conservative, unless you're dealing with Parisian based culture. Like if you, French millionaires happen to be usually, well, if they're living in Paris, if they got some exposure in Paris, they tend to be a little bit more Western. But if they come from just a different region of France, because France is huge, then they are very conservative. They make it a little bit difficult, and they give you a lot of attitude. French people have a lot of attitude when it comes to a deal, and they will literally want to have a lot more control in a deal. Okay, so it's not a bad thing, but I tend to find it easier to pitch to a young Swiss company or investor. Like if I'm dealing with Swiss individuals, if they're under 50, I know I've got a chance. If they're over 50, I'm like, oh, forget this. This is never going to work. Unless you have real estate and medical. So those two industries, oh my God, they love it. North, I love, like north of Europe. So you've got Germany, you've got Finland, Sweden, all of those countries, Norway, they're very forward thinking. Those investors, oh my God, they will invest into anything. They think very American. I love that. Americans and UK, I love as well. And North and UK, I would put in the same category. Then it comes to the US culture. The US culture is very good. I mean, that's why most of my capital raising, I'll be very honest, has come from the US, because they are the first to be like, yes, have the money. It depends what you're pitching, right? Because if you're pitching something like real estate, the whole world will love real estate, which is why I'm only pitching real estate to start with my individuals. With fintech, I can go to UK and the US all day long. Okay, something like that. So those are my two industries, real estate and fintech. Whatever your industry is, which I would love to ask, like what are if you want to pitch something, tell me what the companies or the industry is, and we'll find the right sort of investors for you. But knowing this matters. Dealing with India and China, I don't deal with Chinese investors. Yes, I do, but they usually come out of Hong Kong. They are control freaks, India and China, right? Control freaks. I'm very nervous doing business with them a lot of the time because I'll be honest, they want the whole freaking deal for their own self, and they won't like your team. They want to replace your team. Like if they, like a lot of Chinese investments, they have so much money, but they will never trust the people running a company. Let's imagine you're pitching 25 million, let's say, Maxine, for, they'd be like, yeah, sure, but we're going to have to put a few of my Chinese speaking only individuals in there, and they will look after the accounts. They don't trust anybody, right? So Chinese investment comes with a pinch of salt. They literally take over. And I mean, you can see this happen in real life. You know, all the retail stores that Gucci rent out, for example, they're all owned by Chinese investors. And you'll see that Chinese people are always running around doing the books. Like they will, if you go to any high street, you know, like, for example, Bicester Village is owned by Chinese individuals. Every kind of outlet like that, which has got the Gucci's, Dior's and all of that type of thing, they're all owned by Chinese in money. And you'll see Chinese individuals doing the books. Like they don't give a shit about anybody. And I know this because I've dealt with tier 1 banks who have Chinese clients, and they've even told me, they've said every time, if we're dealing with Chinese money, expect them to only work with their guys. They'll fly them out. They don't care about you and your company. They will invest, but they also will take control. So I'm very nervous. I don't know, believe it or not, even being an Indian myself, I was born in East Africa, so I don't really relate to Indian culture, like mainline, I've got no relatives there. Indian culture is quite the same. Like I'm terrified of having Indian money in my projects and Chinese money. I'll be honest, look, I haven't got enough experience or with them, but I love anything from even African money, right? Like when I say Africa, I'm talking about East Africa. We have a lot of clients who are super wealthy, and they are very, like East Africa, which is the area I'll come from, when I was born and I moved to the UK. Obviously, any ex-British colony, if they're in Africa, they're usually very, very forward thinking, and they're very good to deal with because their money is usually parked in Switzerland. So I meet a lot of these people. They're clients of Swiss banks, which are the people that I have been training. So I've had exposure to their clients from a long time ago, from early 2000s, because a lot of the banks used to send them to me to help build a portfolio of property, for example. So I've had exposure of these type of clients and I like them, right? So I would happily work with investors there. So why am I telling you all this? You've got to be careful whose money you take, because it's easy saying, I just want money. But if you end up with money with a partnership that doesn't really work, i.e. the cultural clash is there, and you don't understand where it came from, you need to be educated on the culture, okay? There is a lot. I mean, Eastern culture, I wouldn't recommend pitching to Russian investors right now because nobody likes Russian money. And unless they're like UK resident or Monaco resident, and you can really you'd work with a bank to prove, but the culture is there. Like, I don't take Russian money, but I would definitely work with my Latvian, Estonian type of people, friends that are amazing, and they are living in England and Monaco, and they think like that. They still are a bit brash, but they at least understand rules and regulations. There's no dictatorship going on. So it's important to know, where is the money? Can I deal with these investors? And am I comfortable to taking their money? Like, it's so important. And that's why in Monte Carlo, if I'm working with you, I will make sure I put the right kind of people in front of you. It would be no point in me giving you completely inauthentic. I'd know your personality, I'd know your culture that you're trying to create in your company, and then match the investors correctly. So family offices, individuals like that, whatever. It's really important. Does that bit make sense? Thank you. I forgot all about the Arab money, right? Big money. I do like this. Arab money, I love it. Like, big tick, because, I mean, when you talk about Arab money, they're quite Western, actually. I know they've got a stereotypical approach, but I absolutely love Dubai money. I haven't raised there yet, but it's so easy. Like, I could raise there in a second. It's just I haven't traveled there for the reasons I mentioned just now. But it is incredibly, very good. It's so good. I mean, you can only judge from the amount of different businesses that live out there, or like the entrepreneurs that moved out there for tax reasons. It is welcoming to a lot of to a lot of different cultures, and also different industries. So you can negotiate with them. Okay, you're going to tell very quickly whether someone's going to take your deal and make it unfair. But I think I would definitely work with that kind of money. It's too easy to get focused on the money and dismiss the relationship with investors, especially if things don't go to plan. 100%. And that's why I wanted to mention this, because most people just want to, as you correctly mentioned, just raise that money and say, I'll take it from anyone. And that's the worst approach. Like, who you take your money from is probably the most important thing, because it's like you're getting married to them, and this is like probably going to last longer than most marriages. So I would want you guys to pick well. So please do that. Like, ultimately, when you're pitching, a good pitch, right? So let's now go to, when it comes to a pitch, how and what should we do and what shouldn't we do? The things that, let's go from a tick criteria. Let's do this. So the yes and the no's. Okay, so what I would love you to understand is, don't just focus, not just about the money. Okay, so that's what we've covered. It's the investor relationship. So we've done that. So that bit is a big no. Pick your investor well. Now, the next thing is it's all about the founder. So I'm very founder centric. When I'm working with, if someone's pitching to me, and I had a pitch 2 weeks ago, I think it was 2 weeks ago, yeah. And last week we had the follow-up. 2 weeks ago, it was a UK company that was, actually, I've had 2 pitches last week from 2 British individuals. And one of them was some sort of app that was, it was so pointless, but it was good, but it wasn't that good. It was an app around car data. So something to do with download. Everyone who has a car should download it because it gives you XYZ criteria. And the founders it's all about founders. So what I wanted to do is I want to know what are these founders like? What are they all about? What makes them so excited about the project? You want to know from the raise, they were asking for 2 million. One, they kind of, okay, 2 million is okay, but it wasn't, you want to look at a lot of due diligence, which I will talk about maybe if I get a chance now, if you've got questions on it. But in a nutshell, I wanted to see, what do they get paid? Because if you're going to raise money and you're asking for a massive salary, you have to justify it, like, and show me that you're actually worth the money. Because or if the other side of the coin is, if you don't take anything as a salary, then the question is, are you full-time on this project or part-time? Have you got money? You know what makes me find, you know, what's attractive, especially when I'm raising capital, is that I don't take a salary from any investment, because I've already got money, you know. And being a serial entrepreneur is super important, you know. So if they know you've got a track record as a serial entrepreneur, i.e. you've made money and you don't need a paycheck, you would rather, I get paid through performance. So like, you know, like how, for example, you have a commission only sales guy, right? They're far more valuable for a business compared to someone. Let's imagine you're hiring a salesperson and they get paid a basic plus commission. You know, the commission only guy is going to be better as long as they follow their guidelines for no mis-selling. Then you've got a much stronger candidate. And the same way, take it to a pitch level. When you're a founder and you're pitching and you say, look, I don't want anything from this investment, the whole money goes into the project because I'm a serial entrepreneur and I can live off what I'm doing, and I am expecting a portion of the uplift to be my profit. That's far more important and far more attractive to an investor than, oh, I'm getting paid. Like this guy was getting paid 90K. So there's two founders in this. And when I asked him, what are you taking from this investment? Like, what do you get paid? He said, not only 90,000. I'm thinking, well, how can you, fine, 90,000 is not a major salary, but the fact that he's never had money from a business before makes me worry that, are you even a business person? Like, how do I know you're actually, if you've never created a business and you're a first-time business owner and you're pitching for capital, how do I know you're even going to be successful? You've never shown any signs of success. You know, so I've got this like double-edged sword with people getting a pay in an investor. So being a serial entrepreneur is super important. So serial entrepreneurship, like you get a massive tick. If you say, I'm not taking any money from this, they're basically come out of a 9-to-5 all of their life, gone into a new, technically a 9-to-5, and they're pitching for other people's money. And where's that money going? Don't forget, you're pitching to entrepreneurs. Entrepreneurs are probably the most intelligent investors you get, right? The unintelligent, or I don't know how you say it, is it unintelligent? Yeah. The kind of investors that are not intelligent are the ones who've inherited money. I'll be honest. Like if you're just working off mommy and daddy's money, and you know, Monaco is a lot of that, right? There's just family generational money. You've got to figure out, has your investor made their own money, or are they just working off family wealth? Because family wealth money will probably go to stupid places because they've never figured out how to make it in the first place, and they'll just happily throw it around. So those kind of people will give money to individuals. But someone like me who started from nothing and has built themselves up and forever expects like that same kind of work ethic from anyone I invest in, will struggle to really like an entrepreneur that, or someone who claims to be an entrepreneur that has never built profits in any other venture before, that has always lived off a paycheck. So if you're someone who has always lived off a paycheck, or you're taking money with the expectation to be given a salary, be careful. And that's an option I would try and take out in your pitch, and probably try and give them two options. You know, I was consulting a lady that was, who's got an MBE, yeah, from the Queen, you know, and in the past, and she was in this clothing industry, etc. And she wanted to pitch now into a new industry, and she was asking for a salary. I said, and she was trying, there are things you should not do. And this is a really good example. You know, one of the options was like demanding a salary because she genuinely didn't have an income source. She was living off savings. That doesn't show me you're a good entrepreneur because you've been living for 2 years off savings. Like good entrepreneurs always have cash flow, always have passive income, always have something going on, or they can make money, you know. Like it could be just you've got a property portfolio. It doesn't have to be complex. You can say, I've got investment properties, I've got rental, I'm fine. Or I've got a consulting business, whatever. But have some sort of income, you know, it matters to me. Then the next thing was they were asking for so much money, but they were giving like a tiny bit away. They were being greedy, you know. So the one other thing you should not do is ask, you know, don't ask 5% for, I don't know, this person was only asking for 500K, right? it wasn't even that much money. But 500K for 5%, and you are a brand new, as a startup, pre-revenue. If you're pre-revenue, that means you haven't even made any money on the project and you're using this money to actually get you to revenue status, then come on, 5% is not going to get you anywhere. You've got to give away more. And what you've got to build into your life is something called a share harvest, right? Then, so build in, so put on here, share harvest means that you give away more. So let's say for argument's sake, you give away 50% of your company, and then you hit milestones. So you could say to individuals, I'm going to use this money and do X, Y, Z. If I get to a certain milestone, I want to buy back my shares or be able to earn my shares 10% harvest each milestone. So eventually you get to your 25% that you ideally wanted to start with, or 10%, you know, like you get your, you'll never, I don't think, depends where you are. When you ask for demand for small, when you ask for things like this, you've got to be really competitive to be able to demand money for such a tiny stake, because yeah, you've got to be really impressive to ask for so small amounts. Giving away more as a startup, if you haven't got track record, if you're not a serial entrepreneur, then be willing to give away more of your company with an option to buy back shares later. You know, especially if you're concept only. So if you have no money created by your company that you're pitching for, don't be greedy. You know, please don't be greedy, because that's another thing I find really unattractive in a pitch, is what sort of equity they're giving away for their investment. Okay, so what else can we talk about? Donald's question, what is a realistic return? We don't talk about returns because that's, I mean, I can, of course, but that's going to be something I talk about in my money mastery workshop a lot more, because then I have to go through your revenue model. It's all tailored to your project. You know, if you're talking about property, we have to look at your revenue models. And then I can tell you what it can't be made up. Nothing can be made up, right? You have to look, it has to be justified. And the other thing is, please know your numbers. So the other thing is, don't just make up. Don't use standards, like use standard for the sake of standard, like terminology. Oh yeah, we'll give you a 25% return on investment. Promising like that, like no guarantees, obviously. Anyone who's worked in money raising world, etc., will know you do not ever guarantee returns. It's actually illegal to do that. You want to guarantee the security. That's what you've got to work on. So you've got to say, when you invest in this project, this is how your money's secure. That bit people don't do, you know. So there are lots of things that I can talk about you shouldn't do, and we'll keep building on this. But in a nutshell, when I talk about returns, that would have to be justified from your revenue model, and you have to know your numbers. So yeah, a big yes is obviously your numbers, like know them inside out. Don't pitch if you don't know your numbers. Obvious, you know, like we've all watched Dragon's Den and we've all seen how people get annihilated when they don't know numbers. So I love that things like Dragon's Dens exist, because genuinely I want people to learn that the simple thing of know your metrics really is true. Like, it's embarrassing if a founder doesn't know it. I've seen pitches where they bring in their financial guy. Yeah, that's fine too. But let's talk about okay, Michael, your questions I'll come back to, because you're kind of going off track. Right, so right now, this is all about pitching, right? Right now, I'm talking about the simple things of, you don't know the investors, or you know kind of where they come from, but you don't have a personal relationship with them. You want to build that, you want to pitch to them. So we've kind of gone a bit granular in detail, although I can go a lot more granular. But let's talk about the absolute fundamentals. When we're investing, and Donald mentioned this at the very beginning, that we're investing in a founder. So one of the most important things to do, and what really impresses me when I work with anyone, and that's usually when I'm mentoring them, and I'm helping two of my mentees, actually three of them, five people from my Monte Carlo retreat are very impressive. So much so that I'm going to help raise capital with them or help them on the ventures. The projects we're working on is one, an insurance company, you know, so something that everybody needs. Like, this is already an individual in an insurance firm. She's an actuary, but we're going to know she can bring in the best team. So what really matters as well is, who is your executive team? So if I carry this over, actually I've got a bit of space. Your team, if you're a startup and you've never got any history in the venture, like for example, you've got no entrepreneurship in, if you're pitching property, but you've never really had any money in property, then of course you need to team up with the right property team. But I think property is a difficult one because everybody's got property, right? So let me try another example. If you're pitching a fintech, right? If you're going to give me I want to be the next Stripe, let's say, imagine you're pitching that, then you better, and you've never done this before, then you better bring in an executive team that has clout. That means a team that, okay, maybe I've got the guy from Revolut, maybe I've got the main executive, one of the ex-directors from Revolut working for me, or from Wise, or from PayPal, or something like that. You know, give me an all-star, exciting team. Like, this is the bit that people underestimate. They think the great idea is going to be enough, but if you are not impressive enough and you haven't got track record as a startup, then you need to bring in the all-star team. For example, when I'm going to be taking a company public, I've never taken a company personally public before, right? So what am I going to do? I'm going to be working with individuals that have gone public, and I'll be working with all the individuals that, for example, I've got two people that are already on public listed boards in the US, New York Stock Exchange. They're already sitting on boards of two public listed companies. They've worked in Standard Chartered Bank. That's how I know them. They've worked in, they're from ex-Harvard, right? That resume looks fantastic. And I say, hey, so are you willing to work with me on this project? And I'll make sure you get paid and blah, blah, blah as a board member. They're in, you know, like that's how it works. And that's what will give me excitement. When I'm pitching to an investment bank, they will be impressed by me, but not enough because I haven't taken a company public, for example. You've got to be very honest with yourself. You've got to eat a bit of humble pie when you go to these investment banks. Look, the fact that they reach out to me is an important thing. And I've got a social media presence and I've got positioning in the market. So they really do like that. If I was completely unknown in social media and I was just like this, hello, I rocked up and I've got an idea, that's not impressive enough, right? So this is something that you guys do need to understand, that if you're not got some sort of power, like everybody, so I'm going to put that in here. If you've got no presence online, you know, like nothing, you're going to be harder to be a year, unless you've got incredible track record and I've made loads of money and this, here's proof. You know, people do like seeing individuals that have some sort of presence and influence in the market. We're in a modern world now. Everybody should be on social media. LinkedIn is a minimum. If you haven't got an active LinkedIn portfolio or profile, you're going to struggle, you know, because people, the first thing I do when I look up founders is LinkedIn. I don't look at Instagram. I don't technically look at Facebook. I mean, I might if I really want to dig deep into their family life, but that's a bit, you know, yeah, that's a different combo. But more than anything, I look at LinkedIn because I can see the full resume there. So if you're not on LinkedIn, please get on LinkedIn because you should be impressive on LinkedIn. Take it seriously and put a profile picture, because some people have no profile picture, which is like ridiculous. That's where your branding comes in. So a big thing about being effective in your pitch is branding. So I will turn it over, but I'll put it here, branding. Your personal branding, whether you've got press on you, etc. Get press as well. Very easy to get press, like, you know, whatever. I mean, that's something I want to work with you guys on if you need it. I've got loads of people that you can work with. But in a nutshell, you've got to be impressive first, then the money will follow. But what's going to make you impressive? How you speak. Who's been to a really boring pitch before? Like, who's been to some sort of presentation that just made you think, oh my God, I can't wait to leave? And this is happening to me every time I go to a Monaco pitch. It's so annoying. I love the before the pitch because I'm talking to people. I love that bit. And then I sit down, I'm thinking, oh, please, I'm like stuck here now for like 45 minutes to 1 hour plus then questions. And it's, you know, if it's a good pitch, I would love it. But the problem is most people have no training in how to talk in public. They're horrific. They'll be using PowerPoints like to no end. What happens when you use something like PowerPoint to give all the points? What is the problem with that? Just imagine you got this guy that's speaking like, oh yeah, you know, in a board. And the worst thing is how they dress, right? Don't give me another man in a hoodie. Like if another tech guy rocks up in a hoodie, I will just go crazy. There is too much that I don't like about that image, because SBF, right? So I think big things you've got to remember is when someone has got SBF has been the ultimate in crypto scam. So if you're going to pitch a fintech or anything with a hoodie, like please reassess yourself, because that doesn't work anymore, because nobody really trusts a guy in a hoodie anymore, thanks to SBF. If you don't know who that is, then Google SBF and FTX, you know, like it was the biggest crypto scam or scam, full stop, in the history of scams. So I think it's ridiculous how bad people come across. And I have seen some really scruffy people rock up to Monaco, and because they think that this whole I can be messy look is in vogue, it's not, because our human mind in the first 5 seconds judges another person. As much as we want to be open-minded, our brain is wired to judge, you know. So if someone rocks up and they're not wearing a clean attire, if they look a little bit overweight and the things don't fit well, you're going to be like, God, have you looked in the mirror before you rocked up here? Like, this is embarrassing, you know. Like, I'm going to be really honest with you guys, because this is what people pay me for, right? That I want you guys not to be embarrassing. You will never be, because if you've got anything through my training, you will be amazing. You have to be polished, because let's give the investors less things to worry about. Like, look good, invest in how you look. Like, it doesn't have to be like major, but look clean, look sharp, you know, shoulders matter. Even like, this is why I wore the blazer today, right? Because I wanted to show you that strong shoulders do make a good impression. Women in particular. There are, you know, some and men should always wear strong shoulders. You can take your jacket off later, that's fine, but just start off strong. That's what I'm going to say. So how you pitch, like the how really matters, right? Really, how you pitch matters. Now, remember, I'm going to take it back to even as an employee. How does this work? Everything. Imagine you're rocking up to a boardroom and you have no idea of what to do. The things that matter is your body language, which is really important. Your tonality is the next one. And what you say, the words, is actually like 7% of importance. The other two, I can't remember exactly, but the rest of the percentage is split between these two. This is the major, this is the next one, right? So but most of what is impactful in a presentation is your body language and the tonality, and how, you know, your pitch, like whether you raise your intonation or you drop it. Like, I spent 15 grand to do this type of training, right? I wasn't confident in, and I spent a 15 grand course for 5 days, and I learned how to speak on stage. Like, I knew that back in 2012, when I wanted to be like an educator, because my biggest driving force is there's not enough women in this industry. And when I went to events in the past, the promoters, I spoke to the promoter and I said, look, there are amazing people here, but they're all men. Like, where are the women? And he said, it's because someone like you, who is incredibly successful, because he knew me, he was a US guy, he is a US guy. He said, you're not speaking on stages. And you know what? This is a problem for me. Like, I want more women pitching for capital. I always see men. Every single pitch I've been to, and I've been in Monaco since 2019, obviously COVID kind of took over, so let's discount a couple of years, but every pitch I've seen so far has been a male. And, you know, I'm not saying that's a bad thing, but it is technically, because where are the women? I'm the only female that's going to now work. Well, I'm going to be pitching, I'm going to be holding pitching events. The reason I'm doing that, because again, chip on my shoulder about this, about where are the women, it's going to be men and women. Don't get me wrong. I'll probably always have more men, because they're the ones to say, yeah, I'm ready for the big money. But I know there are some strong alpha powerhouse women that will be also very suitable for this. I saw one female, she was a husband and wife couple, and it was a typical dynamic. Husband did all the money talk, she did the charity bit. You know, it was really like dull to see. British couple again, really nice, but the female, I even gave them feedback because they reached out to me on WhatsApp and whatever, and they were quite keen. Really unprofessional setup. But in a nutshell, I said, look, she was a stronger speaker. You actually made it look a little bit boring, you know, like he was the guy in charge of everything, control freak, but she was working full time with him. But when she came across, women are actually better closers than men. Why? And this is going to be alarming to most people. Why is it that women can raise, but they just don't show up? This is why the stats are so against women. So I'm really like, why do women have a better authority when it comes to, if a female was pitching on her own, why is that usually better than a male? They come across less, what's the word? Yeah, genuine is good. They have authenticity, same thing. And people don't realize that they're getting pitched as much. You know, with a guy, you already have your guard up. That's what men do. Like, there's too many male charlatans in Monaco. Like, for example, I'll give you another statement. I work with two Monaco institutions, government institutions. One, because the government actually reached out to me. It's a small little close network, right? I was speaking to a lot of the banks, and they mentioned actually so-and-so should speak to you. I was like, okay, I'd love to. I made the connection with a main guy in the government, and this guy has made me their, what do they call it? Thought leader for venture capital. So that means that everything they do, I have to submit. I don't know, it's not like a job or anything. It's just like, I'm like I help shape their future. And the guy's young. He's like my age, 40, you know. When I say young, it's because everyone in Monaco is like 80. So that's why it's young. But 40 for me is very middle-aged, just so you know. I don't feel like I'm young. I'm not like 20. But I feel like I'm in a responsible place in my life to be taking money seriously and building net worth, which is why I want to do what I'm doing with you. Because net worth, I'm going to be talking about next, and how a pitch can help you build net worth. If you're over 40 or approaching 40, like, this is what you should be obsessed with. Like, literally, most people just waste. I take life in two sections, the first 40 years, and hopefully, fingers crossed, the next 40 years. I don't know how long I'm going to live, but definitely 40 years old is like the tipping point for like change your investment strategy. Like, stop doing what you did when you're 20 or even 30s. In your 20s and 30s, you can get away with like a little bit of volatility, making money, etc. But after 40, you've got to change. That's how I live, and that's how I see it. But anyway, I'm a thought leader to the Monaco government about the venture capital space. So I've taken it in my own hands. I've been watching it for many years, and I've said it's rubbish. Literally, I told the guy, like, it's useless. You guys are not going to be competitive enough compared. The money's all here. The wealthiest people in the world are in Monaco. Where do they put their investments, though? Where do they go to enjoy a pitch? They go to Miami, they go to New York, they go to California. You know, they actually fly out to look at new pitches. I know, because I speak to them. I'm like, where do you invest then? So many venture capital funds are based in Monaco, or the founders are based there, and they're like, well, we don't find the good pitches here. All the talent seems to go to the US, and we find they do it better, like they pitch better. So I know how to create a very high-end investment pitch event, and I want to invite you guys to that type of level. So it will go through a stage. I need to train you on a few things first, and then we can go to that level. So I'll tell you about that in a moment. But in a nutshell, it's got to be done better. There is so much opportunity for you guys waiting that I want to show you what it can be worth. So where was I before I got sidetracked? Oh yeah, net worth. Okay, so this is how I see it. How does net worth help you? Let's imagine we have a company, right? Pitching 10% equity. I'm going to keep the numbers simple. You're giving 10% away, and let's say you are, let's keep the numbers very simple, 10 million. Okay, pounds. You can pitch in pounds, you can pitch in euros, you can pitch in whatever country, currency you wish. Yeah, whatever. The going currencies are pound, euro, and dollar. That's it. Like, I don't see anyone else pitching anything else. I've seen people pitch all three of those currencies, and only them. Pound is fine. Like, you can go to Monaco and pitch pounds. So why is this important? Imagine you are the sole owner of the company, so you own 90%. What is your net worth? If you raised 10 million for 10%, how much net worth have you created in that transaction? How much net worth have you created? If you're the owner of this, right? This is you. This is investor. You've successfully given away or you successfully raised 10 million and you've given away 10%. So how much net worth have you just created? Your company post-money valuation is 100 million, but you own 90%. So it's 90 million you have just created in net worth. In a nutshell, this is how net worth is created. You know, Elon Musk, we all know Elon Musk. He hasn't got all these billions in the bank, right? He has net worth. And how he negotiated his share harvest from Tesla stock was genius. You do know that Elon Musk comes to Monaco. He usually comes after the Grand Prix, and I know the room he uses to pitch. You know, like, we can use the same room if you want. It's a really cool room, but it's a very nice one, and he uses a small boardroom, like 9 people max. But you've just created 90 million, and this is what someone like Elon Musk is very good at doing. He will raise money, give away equity, and then his net worth goes up. And it's public listed stock. If you're private, it's just as good, you know. But why is this important? Because building net worth is easier than building cash in the bank. Like, I've spent all my 20s and 30s building serious cash, and I have a lot of cash, don't get me wrong. But what I've got net worth as well, many things. But now, after 40, I'm obsessed with now building more net worth. Like, how can you do that? How does someone get to billionaire status? Because it's very easy, actually. It's very easy to get to billionaire status. It's just that not many people really understand the process. And I'm telling you now, it's simple. Raise money, give away an equity stake. And if you own that, look, I'm not saying this is a normal thing. You might be 50%, 25%, but this example shows you how net worth is created. How does this help you in the future? Because banks lend, and Morgan Stanley, don't forget, this is where this link comes in. I said to Morgan Stanley, how can you help my clients? Because we don't want your products. I don't want you pitching them any investment funds, because I don't believe banks know how to invest. But I said, what can you actually do? He said, well, we can lend against the net worth, right? So this is what Elon Musk has done. He's done this, right? He has done 60% loan to value is typically what your banks will give you on this. So 2/3 of 90 million, let's say for argument's sake, is 60 million, right? 60. Just say for argument's sake, you get 60 million cash from the bank to then go and reinvest. But you must only take money from a bank if you know what you're doing with it. Otherwise, you just ruin your life, right? So if you are a serial entrepreneur, this is why net worth matters. If you're good with money and you know how to make it become, you know, even bigger, then lending against your net worth is what banks do. So build net worth, please. You know, this is what I'm trying to help you with. I want you guys to, one, be able to pitch for capital, build your net worth, and I will give you the banks waiting to lend. Why do banks want to lend? Because they make interest. This is how they make money all the time, right? So there is a win-win here, and I want you to get excited about it.